a very special guest, JC Parets, president and founder of allstarcharts.com, one of the most widely tracked technical analysts worldwide. JC, great to have you with us. The US market has seen a double-digit gain post-Christmas. What are the charts suggesting going forward from here?
So when it comes to US markets, it looks like we are in the midst of a major range. You know, we failed at those highs in the S&P 500 and the Dow last January in 2018, failed again at the same levels at the end of September and early October, and we're still below that. So I think we need to just be aware and recognize that we are in a structural sideways range, and then there are short-term swings higher and lower as we've seen over the last 3 months. And I don't necessarily think we're going to get such extreme trends like we did down in the fourth quarter and we did up over the last couple of months, more of a sideways trend. And I think that a major characteristic that we see in these environments is a flat 200-day moving average. And that's precisely what we have.
Right. JC, last year we saw fund flows moving from emerging markets to developed markets. Do you see this trade reverse in 2019?
So far, we've seen that. We've seen relative strength out of emerging markets, particularly Latin America. Very interesting. We saw in the fourth quarter with stocks around the world selling off. Latin America, specifically within emerging markets, was showing a ton of relative strength. And when you broaden out the emerging market theme with new lows in the S&P 500 and Dow and a lot of the European indexes in December, we had higher lows in emerging markets. Traditionally, over the last 20 years, when emerging markets put in that bullish divergence, the ensuing trends tend to last not months, but years. So yes, I do believe that a rotation into emerging markets is something that we need to be betting on for 2019.
JC, India was a relative outperformer last year, which hasn't really worked out well in the current year so far. Any view on the large cap indices such as the Nifty Bank, and what levels would you be watching out for?
Yes, it's interesting. Over the last few weeks, we have seen outperformance out of the small caps over the large caps, which is really interesting because if you recall, the small caps started outperforming large caps last January, which was a great indicator of risk aversion, not risk appetite. So now that we're seeing small caps kind of step up a little bit, that's really, really interesting. Now, I don't necessarily think that's bad for large caps. To the contrary, if small caps are outperforming large caps, that is most likely happening in an environment that stocks overall are going up. So I'm looking at 10,500 on the Nifty 50. That's my level. If we're above that, we want to be long stocks. There's absolutely no question. When it comes to the bank Nifty, I think it's the January highs from last year. That's the level we want to watch, 27,500. If we're above that, we want to be long bank Nifty. I think we can go to 33,000. But again, it comes down to risk management. If we are not above 27,500 in bank Nifty, I don't think there's any reason to be involved from the long side. I think there's other places that we'd rather be in that scenario. But we want to be buyers of this breakout.
Sure. The last 2 weeks have been very good for the Indian mid and small cap space. Do you think they've bottomed out, or would you say this is just a temporary relief rally?
The fact that not only are they not making new lows, but they're actually outperforming large caps, to me, is evidence of rotation into small caps and mid caps, which is evidence of risk appetite. So what I would say to answer that question, we want to look to continued outperformance from small and mid caps. And if we do get that, then I think stocks overall do well, small caps, mid caps, large caps.
All right, let's take a look at IT. Those stocks are continuing to outperform from last year as well. JC, do you believe there's room for more?
Yeah, IT stocks will tend to do well in an environment that stocks overall are doing well. I'd like to point you to where we're seeing the most strength from a structural perspective is in the bank stocks. If you look at Bank Nifty pushing up against those highs, Look at Axis Bank breaking out to new highs. ICICI Bank presenting a good opportunity. If ICICI is above 360, we want to be long that stock. I think we can go to 475. But to answer your question, yes, I do think IT can do well in that environment, but the relative strength is where we want to be, and we're seeing that in the bank stocks, particularly the large caps.
Okay, so which are the other asset classes that are looking attractive to you on the charts? For example, I mean, do you have a view on precious metals or the Indian rupee?
You want to know something? I really like what we're seeing in precious metals, you know, getting to the rupee and getting to the dollar. The US dollar has done nothing this year, which was kind of a big emphasis of ours as coming in. Seeing that outperformance out of emerging markets in Latin America, a weaker dollar makes sense in that environment. It hasn't necessarily been so weak. It just hasn't really done anything. I think if dollar rupee can break below 69, I think rupee can really get going. And in that environment with a weakening dollar, precious metals tend to do very well. So both gold and silver are areas that we're looking for in the US in dollars, price in dollars. Gold, if we can break out above 1400, that would complete a pretty significant base. And I think gold can go substantially higher. In rupee, we're looking at more 32,000 is really that level. If we're above that, I think we can move on to 37,000. And of course, silver, we're looking at 40,000 price in rupee, and I think we could head up towards 49,000. So potentially 20% of upside in silver. And remember, in that environment, the precious metals are doing well. Silver tends to outperform when metals are doing well because higher beta, more volatile, right?
What are the charts suggesting for India's top two stocks by market cap, i.e. Reliance and TCS?
If the large caps are going to do well, right, and that's probably happening in an environment that small caps are outperforming again for the first time since 2017, if we're getting that, Reliance should do well, the IT stocks should do well. I like stocks as an asset class in that environment, and I think the Nifty 50 presents a great way to take advantage of it because not only are we getting the basket of all of those stocks you mentioned and others, of course, but we are also getting very well-defined risk. If we're not above 10,500 in the Nifty 50, then no, we don't want to be long a basket of these stocks. If we are, I think there's tremendous upside. I like the risk reward.
JC, a pleasure speaking with you, and thanks so much for taking us through your view.